Well, it's August 2022, the end of the year is in sight, we're officially in recession, the Fed has raised rates again, and as always, there's a ton of conflicting information out there about the housing market. So it's time to check in and see what's actually happening with the housing market, both nationally and locally here in Spokane. My name is Phil Wells, I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to look at national pending home sales, we'll look at mortgage rates as well as mortgage application rates. We'll then look at the Spokane market itself. From there, we'll look at some news articles that have stood out to me this month, before trying to piece all that information together and figure out if we can summarize the market as we see it right now in August 2022. So let's get into it. Looking first at national pending home sales for existing homes. Just a note on all the figures throughout this video, they are the latest figures that are available, but there is often a lag when it comes to reporting these figures, particularly at the national level. For example, the national pending home sales we're going to be looking at are from June. We look at pending home sales rather than closed sales because it actually takes a while to close a transaction. So closed sales in June would represent activity back from April and May time, whereas pending home sales for June give us the most up-to-date impression of what the market's doing. Contract signings were down a whopping 8.6% month over month in June 2022. Year over year, contract signings declined 20%, which represents 13 months of consecutive year over year sales declines. Where I am in the western region, sales declined 15.9% month over month, and they declined 30.9% from the year prior. Here's what the National Association of Realtors chief economist had to say. Contract signings to buy a home will keep tumbling down as long as mortgage rates keep climbing, as has happened this year to date. There are indications that mortgage rates may be topping or very close to a cyclical high in July. If so, pending contracts should also begin to stabilize. According to the National Association of Realtors, buying a home in June was about 80% more expensive than in June 2019. Nearly a quarter of buyers who purchased a home 3 years ago would be unable to do so now because they no longer earn the qualifying income to buy a median-priced home today. Home sales will be down by 13% in 2022, according to our latest projections. With mortgage rates expected to stabilize near 6% and steady job creation, home sales should start to rise by early 2023. Those are massive declines posted in June there. Do these figures from June represent people holding off in anticipation of a recession being announced? Or is it a more fundamental slowdown we're looking at? It's certainly too early to tell. Anecdotally, my buyers seem to have a renewed sense of enthusiasm since the recession was announced, and I've connected with more potential buyers in the last 2 weeks than I have in the past 2 months. While on the face of it a recession is bad news, at least people now know the market conditions they're operating in rather than having the anticipation of some kind of downturn. But that's just been my experience the last couple of weeks. We'll have to see how the data actually plays out. Now let's move on to take a look at mortgage rates. Obviously, most people buying a home are buying a home with a mortgage. So to keep an eye on rates gives us a really good idea of what buyer demand is likely to do. Rates are also pretty high right now, we all know that. But by the time an interest rate makes the news, it's already out of date because these rates are in flux daily. So it's important to check in and see what's actually happening. Sticking with June for a second, mortgage rates at the start of June were at 5.47%, and by the end of June they were at 5.7%. The most recent rates I could see are at 5.13%. So a steady decline there since the end of June, despite the Fed's fund rate increasing an additional 0.75% to 2.5% in that time frame. We are at a weird time in the market when it comes to predicting interest rates. The Federal Reserve really only has a throttle and a brake. They can either raise rates or lower rates to tackle inflation. But how are they going to tackle inflation in a recession? Typically, central banks drop interest rates when a recession occurs in order to stimulate economic activity. However, dropping interest rates is likely just to spur inflation further. So it's worth asking the question, are we now in a stagflation cycle? That's where economic activity declines, but prices continue to rise. That's a really difficult cycle to get out of if that is the case. The last time the United States was in this sort of cycle back in the 1970s, the Federal Reserve under Paul Volcker raised interest rates to above 19% in order to ward off inflation, causing a massive economic downturn. However, in hindsight, it turned out to be the bad-tasting medicine the economy needed in order to get back on track. However, I cannot imagine the impact that would have on the economy right now. Sticking with mortgages for a second and looking at mortgage application rates. After all, it doesn't actually matter what interest rates are if nobody's applying for a loan after all. This is, of course, a huge leading indicator for the overall housing market. So let's head over to the MBA, the Mortgage Bankers Association, and see what the experts have got to say. Remember, we're no longer looking at June now. The Mortgage Bankers Association publishes these figures weekly, so we're able to get a really good, up-to-date impression of what the market's doing. Overall, mortgage applications were up slightly, 0.2% on the week. That's not really much to report. Regarding the purchase market, which is the only sort of mortgage applications I really care about, the purchase market continues to experience a slowdown despite the strong job market. Activity has now fallen in 5 of the last 6 weeks, as buyers remain on the sidelines due to still challenging affordability concerns and doubts about the strength of the economy. So not a very positive outlook there from the MBAs, citing affordability concerns and the overall economic outlook as reasons that people are holding off purchasing. Moving on from mortgages and looking at my local market, Spokane. Now remembering that these are actual sales for July. Sales were down 27.8% year over year. That's a huge number. Home prices are up though, 6.3% on a year over year basis. It's worth noting that we are seeing appreciation slowdown, which in my opinion is healthy. 6% year-over-year appreciation is much more sustainable than the double-digit year-over-year appreciation we've been seeing the past couple of years, and that shouldn't cause you too much concern. Inventory is up to a 1.7-month supply. It's worth mentioning that a balanced market would look more like a 6-month supply, so that gives you some perspective and goes to show we're not over the low inventory phenomenon just yet. New listings are also up year-over-year, which is a great thing to see as well. So the Spokane market mirroring the national market there pretty closely in terms of large sales declines. Remember, the Spokane figures we just looked at are closed sales for July, and as I mentioned before, closed sales in July represents activity back from June and maybe even as far back as May. So it's possible fears of a looming recession may have played a part in the downturn we've seen there in closed sales figures for July. Now the recession has been declared though, and we have some level of understanding of what the overall economy is doing. Is it possible people will just get back to doing what they were going to do anyway and start buying homes again? That's just a theory to watch. Anecdotally, like I mentioned, I have been seeing more buyers recently in the last couple of weeks. But my experience alone does not represent the market overall, and we'll have to see how the data plays out. Now I wanted to look at a few news articles that have stood out to me this month. Starting first with the big one. How is this recession or economic downturn going to impact the housing market? This article was written by Jay Scott. For those of you who aren't familiar, Jay Scott is a heavy hitter in the real estate investment space and the author of several books on real estate investing. He starts, there's a lot of talk these days about economic cycles, particularly recessions. I've noticed that many people assume that with an economic downturn, real estate will get hit as hard as the broader economy and other asset classes. The truth is, while real estate does sometimes get hurt during a downturn, there is much less correlation between real estate and the broader economy than most people believe. In fact, during more than half of the previous 34 recessions, dating back over 150 years, real estate has either not been affected or hasn't been affected nearly as severely as other asset classes like stocks. He then goes on in this article to highlight the differences between the business cycle and the real estate cycle. He also spends some time highlighting the differences between now and 2008 and finally concludes by saying, real estate could get hit, but if history is an indicator, it's far from certain that we're in for anything major. This article is a very good read and I'd encourage you to check it out in its entirety. A link will be in the description to this video. Now I wanted to see how inventory is shaping up. As we saw in the Spokane market, inventory does appear to be expanding, which is fantastic news. There was a time only a few months back where I was familiar with almost everything that was on the market at any one time because there were so few houses available. This is great for another reason as well. As I mentioned before, if we are in a stagflation type environment, then an increase in supply is a really good way to bring down inflation without the Fed having to take drastic action in terms of really high interest rates to bring down inflation. This article is provided by Stessa. According to new reports, housing inventory is on the rise. New 2022 housing completion data projecting an increase across all housing types due to a record number of construction starts. That said, Fannie Mae expects housing purchases to drop despite rising inventory due to our higher inflationary and interest rate environment. Specifically, they expect home sales to drop a total of 13.5% in 2022. So there's news that home building is up. We also have news from the National Association of Realtors telling us that there are 30% more homes available to purchase right now than there was in January. So a really positive sign for inventory there. We had unbelievably low inventory the past few years. At the height, I remember submitting an offer on a medium-priced home to discover that we were competing with 20 other offers. Needless to say, that is not a healthy economic environment to be operating in, and I'm glad to see the back of it. That said, we're not out of the woods just yet. Figures from the National Association of Realtors show we're still in seller's market territory, with around 2.5 months supply of homes, and as you can see, that's still well below neutral market. In addition, figures from Bloomberg highlight the fact that we are 3.8 million homes short. Whenever I hear this figure reported, it's either 5 million, 3.8, 1 million, or somewhere in between. The important point to take away, though, is that we're still millions of homes short here in the US. So while we're heading in the right direction, we are not out of the woods just yet. Lastly, I wanted to reassure you that home prices aren't going anywhere just yet. Figures compiled by Keeping Current Matters show that experts are predicting an average of 10.3% price appreciation in 2022. So while we're seeing appreciation slow down, we're not at risk of slipping into year-over-year price declines just yet. And that's all the news I wanted to cover this month. With so much going on, it felt like a good idea to follow the maxim, when in doubt, zoom out, and just focus on a few high-level topics for this video, rather than getting bogged down in the granular details. Now let's try and piece all this information together and summarize the market as we see it right now in August 2022. The big news is that interest rates are still in the 5s, inflation is far too high in the high 8s or low 9s, we are officially in recession despite what some White House spokesman will have you believe. Purchase contracts were down substantially in June, but home prices don't seem to be going anywhere just yet. And while more inventory is coming online, we are still in seller's market territory, but the trajectory is moving in the right direction towards a more neutral, balanced market. In terms of Spokane specifically, Spokane is mirroring the national market, with closed sales down dramatically here in July, and inventory is still very low, though it is expanding nicely month over month. The playing field in the game of sellers versus buyers is beginning to level. I'm noticing in my business that the idea of bidding at a home at asking price is no longer a laughable concept, it's actually a serious consideration. I'm also seeing more time on market becoming much more common. So if you're a buyer right now and you can stomach the current rates in the anticipation of being able to refinance in the future, then now is really a great time to buy. If you're a seller, know that home prices are still rising on a year-over-year basis. But selling your home is not going to be a cakewalk like it was only a few months ago. You will have to properly prep your home for sale and devise a real strategy before listing your home. Gone are the days where you could upload 4 crappy iPhone photos on your listing and have a one-line description and expect multiple offers in the first weekend. That's all I have for this video this month. I hope you gained from this video. If you did, please like and subscribe. That really does help me out. If you are looking at buying a home here in Spokane or selling a home here in Spokane, then please reach out, give me a call, shoot me a text, send me an email, and I'd be honored to work with you. Until the next one, my name is Phil Wells, and thank you for watching.